Welcome back to my channel. Today we're going to review Radix. For those who are unfamiliar with how my channel works, what I do is I do research, I feed it into a model, the model has an output, and we weigh that model's output to reality. I reflect and modify the model to correlate to higher ROI opportunities in the cryptocurrency space. This is the model. The project is Radix, and I'm going to jump right into it. So what does Radix do? What is the problem it is addressing? Composability, the trilemma or scaling, and incentives for developers. So what is composability, you might ask? It is communication between shards. In this particular example is what we're talking about. Basically, it's like how different components fit together. That's what composability really means. It's just how different working units fit together. But what we're talking about here is communication between shards, and this is a scaling technology for blockchains. So instead of having a single line of throughput, we're going to have several lines of throughput, and those are the shards. So we could split data onto several pieces and operate in parallel instead of on one thread. So now that you're going to have one thread turn into multiple threads, so one thread that's going to turn into multiple threads. Now that you're going to have multiple threads, you need them to communicate with each other to have a seamless experience. If this is your platform and it's running on multi-threaded architecture, you're going to want the applications that sit on it to sit on multiple threads. So it could sit on this thread as well as this thread, and you want them to communicate. That's what composability is. And right now, no one has any solutions for this. I mean, I would say that Polkadot's kind of on this, but it's more of a, I don't know if it's fully, I don't know if it's, you can do atomic swaps or atomic instantaneous actions between shards. But that's what they claim they're going to be able to do here. So it's as if they're all the same, as if all these different shards are the same throughput, and so that there's less room for hacking, etc. So all of the Ethereum dApps are on one shard right now, but what we don't know is how they're going to communicate in the future. ETH has not established this yet. They have not established a solution. Composability, it's like Legos, like I said, but since Ethereum's getting this major upgrade, it's going to drop issuance and all that other stuff, but they have not addressed the composability issue, and it could be years out for Ethereum. So if this project is successfully launched, right now this project does not have smart contracts, but if they're expected to get them roughly in the beginning of the first half of 2023. How development works, it might be later than that. But if they do deliver in that time frame, then they might be way ahead of Ethereum in terms of having composability. And they also claim that this project also will not have the trilemma. I personally have never believed in the trilemma. When Vitalik Buterin first stated that the trilemma, I never believed it from the day one, because I knew that when it comes to software, a practical solution would arise. And there's plenty of projects like this one that claims that. So for me, this isn't the biggest deal, but the new iterations of blockchain, they don't have any scaling issues with this trilemma. Because I knew that technology would reach a point where there would be seamless, trusted environments on these blockchains that is just like our current fast experience today at the speed of electrons. Okay, and so now another problem that it solves is having an extremely secure programming language, which what they like to call financial units. We have object-oriented programming. This is called financial asset-oriented programming. That's what it's called. And the language is Scripto. That's the name of it officially. It is derived from Rust. But what this Scripto programming language does is it's asset-oriented, just like object-oriented in programming. So as an investor, the only concern that you would have here is that this development framework, this development language, is so that developers can develop more easily and more securely. And so there's less attack vectors for when these things are live. So, and there's also another aspect of this that I want to talk about. So they, we have a developer framework. We don't break composability, but there's also developer incentives. And I think this is also another powerful aspect of this project is that there's a blueprint library or a dev marketplace, development marketplace. And you can write code into discrete units, and then developers can have royalties every time that code is used. So you can have a whole entire development company that writes some powerful piece of code, and it could be, code is just like rockets, okay? And it could take a lot of engineers to design it. So you make it, and then this thing starts producing revenue once it's live, right? And developers might have incentives to build like complex code on here that is utilized for the market and have royalties in the future. So there will be incentives for developers to build on this thing based on the structure of the blueprint library. Basically, the CEO in one of the interviews said the code is a conditional finite state machine for mission critical operations. So it's the same kind of stuff they use in nuclear facilities. And all the units can be filled together like Legos, once again, that's the composability aspect. But I don't know if this thing is Turing complete. I think that's where the finite state comes from. What that means is that it can't do everything, but it is built specifically for the purposes that it wants to accomplish, once again, to reduce attack vectors. So finally, what is Radix? It is also, it has a different consensus engine than all the other L1s, called Sirius Consensus. And it's a very advanced design. And it allows for linear scaling. So this is another part of this project that I find very powerful is each additional computer, more computers means more scale. So in other projects, you need some throughput threshold or quorum of computers reached to reach consensus. With this one, each additional computer scale. So it'll be able to scale infinitely with the number of computers added as needed. And it's made up of two layers, the Radix engine for apps and the Sirius for consensus. So that is generally what problem it solves. Now I'm going to dive into the token model and whether or not we can expect an ROI from this that is enticing for developers. For investors. Now remember, nothing I state here is financial advice. This is all my model, and it's just out there for educational purposes. That's all. So, future increase in demand for the token, model expects that to be the case. Price FOMO, model expects that to be the case. Social media, you are not really early. There are some components of it that could be considered early, but it is not something that's under the radar. It had major hype 8 months ago. A lot of people became aware of it then when all the channels were, and it must be their marketing team, etc. So it's not something you're totally early on. I'll give it a neutral rating for social media. Regarding the roadmap, they have a Babylon upgrade coming, which is crypto will be finalized, and they'll have some of those components built out. They'll also have the royalty systems, so this is powerful. But none of this really matters until about the first half of 2023, when the mainnet onboard of smart contracts of Babylon are done. That's when we can expect, I think, for this to get price action, is when the smart contracts are launched. That's when it could potentially get some hype. And that could also lead to price action from the tokens getting burned, etc. But I'll get into the token model in the future. But this thing does have a good token model to capture the value that moves across it. So I'll just say that right now. And then finally, after it gets this big upgrade, which I think is the most important one for now, it has Xi'an update, which is unlimited scalability, and it's just this is scaling, but scaling is not important until you start getting traction. Is it great to have scaling ahead of time? Absolutely. And then finally, governance is not figured out. Governance is to be determined, and nothing has been figured out with that quite yet. But the roadmap is good. It has a good roadmap. All right, so let's get into the token model. It burns 100% of fees, so basically that could be very deflationary. But this doesn't matter until it goes live. It is live right now. It does have a mainnet. You can transfer tokens on their mainnet. But when smart contracts are live, that's when I think that the burn effect will start getting felt. The token is used for staking, access services, deploy smart contracts, transactions, governance, but which is not figured out yet, but it will be used for governance, sharded throughput, and proof of stake chain security. So the token is a critical component of the ecosystem. The value of the target market is the L1 Web3 architecture. That is a $400 trillion market. That's going to eat the world. Blockchain is going to eat the world. This market of trust computers is a $400 trillion industry. But there is obviously a lot of competition, but eventually all the world's assets will move into blockchain. Dividend irrelevancy. So all the token model stuff is good, and the token distribution is good. There was fears in the past, but those are moved on. So from distribution perspective, and because of the design of it, these things won't be relevant in the future. The ICO performance roughly 2x, and price action is 2x above the average crypto, so its price action is good. Right, as of making this video, it's not under any FOMO, fear of missing out. It's not in a super, so that's when you would want to invest in something when it's not experiencing a large degree of fear of people jumping in. It is not a low market cap. This thing is very large. It's got a 700 million market cap, fully diluted at 15 million. So you can see about half the tokens are distributed. The price is 6 cents at the making of this video. Let's see here. So money needed to move up, decrease, expect that to be the case. Tokens on the sell side to decrease, expect that to be the case. This thing is not live. I mean, it does have a mainnet, but it's not really live with what its services provided are. Yes, you can transfer tokens around, but that's not a big deal. Smart contracts are what I'm looking for. So it's not really servicing a niche, and we'll see that in the first half of 2023. And it has a good liquidity depth, but not for relatively for a market cap of this size. But I'll actually say that the liquidity depth is not that good for the size of it. But, I digress. I'll keep continuing. All right. So it is centralized in that it needs the team to perform. The team is good. They're a good team. They're very capable. And we don't know what the governance is going to look like. So those things are, it's low. It is centralized as of right now. So this is all just neutral stuff. It's in the trust component of this project, meaning that you need to know that the core teams, the developers are going to deliver. That's what you have to believe in it right now. It hasn't been taken over by the community. It's still an early stage project. They haven't figured out governance and what that will look like. So that's the stage that it's in. It's in the stage where you need to trust the developers. They are very good developers, very successful developers. And they made this project get to $1 billion market cap, which is not easy thing, not an easy fact. So that's part of their history, and they're very competent, etc. So and they also have some major backers like IBM, Visa, Nvidia, Microsoft, T-Mobile, and Consensus. Are on their front page. So they're collaborating with these people, these entities that validate that they know what they're doing. Now, one of the strongest aspects of this project is not in effect yet, but will be, is when those developer libraries go live and those incentive programs are in place. So developer experience, developer motivation, and high-value upgrades, I expect all these things to be the case. I expect the services to increase quite rapidly because of the developer incentives on the token model. The token model is so good that I think that it will incentivize people to build on here, potentially leading to companies to build on here. Will it have moats and flywheels? I expect that to be the case, meaning that it'll keep retention. And I think it could potentially be one of the best options of the competition when it goes live. Head-to-head, haven't really seen many of those comparisons. But, I don't see a big network effect now. Now, here's one of the most negative components about this project is this project is not a first mover by any sense. It could be a first mover in composability. But, Polkadot is kind of in the lead with that. I don't know, I would have to go even deeper to know whether Polkadot will have atomic capabilities. I think that there are literally applications on Polkadot that are trying to build that out. But Polkadot is, usable right now. The smart contracts are usable, and that's even 8 months ahead. And so that is important in blockchain. Look at Ethereum and how much Ethereum has maintained its position simply because it is the first arriver. Ethereum's technology is definitely not the best anymore. There's much better projects like Polkadot or like the other ones that are just better technology, but it doesn't matter because Ethereum came first. And look at Bitcoin, still number one, and it's literally can't do anything except for transfers, okay? So being first mover is extremely important. It is extremely important. I cannot emphasize enough. And that is the greatest weakness of this project is it is in such its early stages. So if there was ever a case for the biggest case against this, it would be that it is not a first mover. It's going to be, live, just getting up and running in the first half of next year. All right, but that's the point I wanted to make there. Now, regarding the token, the large business models that demand a token to reflect their needs, I think that there's a potentiality that businesses will want to build on this and create whole entire company structures on this platform because of those library incentive programs. And that could lead to large amounts of code in the future to be built on them. All right, that's everything with the model. All right, so I'll get into the summary. Is it a low market cap with an accomplished CEO? I put no. Early to social media, I put neutral. And live niche, no. So, like these things usually indicate a good point of entry. The pros, it is well-designed technology. It is a great token model. There's no hype right now, and developer incentives are going to be excellent for this. It has great marketing, and it's got a giant addressable market. The cons, it is a relatively large market cap. It's late on the arrival, and it's still in the early stages. It's not live with smart contracts. The governance is unknown and far out, and it's got lots of competition. So it's not an early arriver. Obviously, that's my biggest thing with this is how all this competition is way ahead of it, and we're talking 8 months down the year, from now potential. But before it's really, before it finally gets smart contracts, and then you could see things getting built on it. So that's, the biggest cons. All right, that is the final summary. All right, if you guys like unbiased reviews of projects with the aim of correlating to the highest ROI opportunities, then please like and subscribe. And I'll see you guys later. Now I'm going to jump into my Patreon exclusive, which is what I personally do with the project and my personal thoughts on allocations, etc.